All right. Good evening, everyone. By the time you get this episode, it's going to be by evening. Welcome to the very first episode of Business Times Nigeria Weekly. This is a weekly podcast where we'll break down the week's economic headlines into clear, relatable insights. So, my name is Orlome of Wauveriole, and I am going to be your host. This is the very first edition, and we're going to be discussing the MPC meeting which held this week. And my guest, Debora Adebayo, is going to walk us through what's MPC meeting about, why these meetings hold, why do you need to pay attention to these meetings as an individual. So Deborah, welcome. Thank you. Thank you for being the very first guest. Thank you for showing on time. And maybe as an intro, walk me through you're an economist. So tell me, the layman on the streets, what do economists do? Um, and how does the decisions taken at I mean, let's even dial back a bit. You're an economist, and clearly there's a lot of attention paid to the NPC meeting. Um, I noticed, for instance, that you have some people doing pre-MPC meeting research reports, post-MPC meeting research reports. You have various news stations, TV news stations covering it live. So, what do economists do, and why should anyone pay attention to the MPC meeting?
All right, thank you very much, Anome. Good evening once again, and thanks for having me. All right, so the Monetary Policy Committee, let me start with that. What does it mean? It's a committee of 12 members, which includes the CBN governor with other policy experts as well. So basically, what they do is that they have a meeting where the central bank governor, including other committee experts, would come together to look at the global macroeconomic landscape, inclusive with the domestic macroeconomic landscape. They look at all of these things to say, well, okay, what is going on globally? How does it impact us as a country? And based on the decisions or based on their assessments, they give a direction as to what interest rates will look like in Nigeria because it affects individuals, businesses, and including government. So, as the case may be, the whatever decision it is that they take affects everyone in the economy. It affects the cost at which we borrow as an individuals. It affects the rate at which you the rate you get on your deposits. It affects businesses in aspect of their the loans they get from banks. It also impacts the government financing as well because government do borrows as well, not just individual. So the decision at the MPC meeting affects all economic agents, household, businesses, and finance, and the government as well. So that is why it is very important, and it's such a big deal because whatever signal they give in the meeting would impact the entire economy in terms of rates across all of these economic agents I mentioned.
Okay. Then I guess maybe the most popular parameter, obviously, is MPR, the monetary policy rate. So could you walk us through, I guess maybe the MPR, what the MPR means, and maybe the most boring of them, which is the asymmetric corridor. And what do those mean? I mean, usual you have your NPR, monetary policy rate, you have CRR, LDR, and all those different terminologies. So what do they mean? And maybe to some extent for the NPR, why should people pay attention to the NPR?
All right, thank you for that question. Yes, I will try to keep it very simple. Like I had said earlier, whatever decision they make, not just on one parameter, a number of them have a way of impacting our borrowings as individuals, our investments, even as business as well as the government. So starting with the NPR is a benchmark interest rate. that give guidance to all other interest rates in the economy, such as the loan rates, the deposit rates, the treasury bills, fixed income bonds, deposit lending rates, and a number of them. So when we talk about this MPR, which is the monetary policy rate, it gives guidance. Take for instance, whenever the MPR rate is going up, that is the monetary policy rate. Whenever it's going up, then you find out that other rates, other interest rates in the economy, such as the rate you get on your deposit, the rate you pay whenever you go to the banks for loans, all of this rate begins to trend. It follows the direction of the MPR. So that is why it is very crucial. So when the Monetary Policy Committee begins to cut rates, as the case may be, then we'll see other rates follow that direction. So it's a reference interest rate. It gives direction to other interest rates in the economy. So I'll go to the asymmetric corridor. It seems a bit technical, but it is not actually. So in simple terms, what the asymmetric corridor means is that the rates at which banks borrow from the is the rate at which banks borrow from the CBN, and the rates are the rates they pay whenever they try to lend from the CBN. So we have two corridors. We have the upper bound, which is above the MPR, and we have the lower bound, which is below the MPR. I'll try to keep it very simple. So the upper bound is the same thing as the SLF. Whenever you go to the CBN, whenever banks, commercial banks, or the merchant banks, whenever they go to the CBN to borrow from the CBN, so the rates, the SLF is what is charged upon. Take for instance, it's currently at plus 50, which is the MPR plus 0.5%. The MPR is currently at 26.5%. So it means that whenever banks go to the CBN to borrow money, they pay an additional 0.5% on the MPR. So going to SDF, which is what the banks pay, get whenever they deposit money with the CBN, whenever they have excess cash and they want to keep it with the CBN. So the SDF is currently at minus 450. What this implies is that whenever banks want to go and deposit money, they have enough idle cash with them and they want to deposit with the CBN, they deduct 4.5% from the existing MPR, which brings it to about 22%. So that means when they are giving money to the CBN, they get a return of 22% on their deposit with the CBN. So it is also a parameter that the CBN uses in order to influence liquidity in the system. So such that whenever the CBN wants to discourage banks from, whenever the CBN wants to encourage banks to, lend money to the real sector, give money out to real sectors that really needs it for their business expansion, they try to adjust these two asymmetric corridor, which is the SLF and the SDF. So when you find out that they begin to, you reduce their SDF lower, they begin to lower the SDF, it shows that they want to discourage banks from parking their idle cash with the CBN. They want banks to start giving this money out to businesses in order to, give those loans out for businesses to expand, make that cash available to the real sector. That is what it means in simple terms. So the next one I will speak on is the CRR, which is the cash reserve requirements. This is for every amount of deposit that a bank has in its vault, there is a percentage that is meant to sit with the CBN. Take for instance, a bank has a deposit of 100 trillion in its vault. So when the CBN says that 45% of this amount should be kept with the CBN, so as the CBN adjusts or the MPC adjusts this CRR, then it influences the amount of cash that is left with the bank to lend out to businesses, to individuals, as the case may be. So CBN the MPC comes together every time to adjust this corridor based on the assessment of the economy. So if they will be tilting more to an expansionary, which is they want to support this economy, they want to support growth, then they would ease some of these parameters in order to make sure that there is fund available. And in a restrictive stance, you see them tightening some of these parameters in order to, fight some other things such as inflation. In the case where inflation is going up, you see them tightening some of this, and which is what we've been experiencing in the past year. So with this decision on Tuesday, we saw that the MPR was reduced, which signals a cautious monetary policy easing. It shows that the borrowing rates, the rate at which you borrow from, the banks, the lending rates, returns on T-bills and other investments will begin to ease gradually as the CBN begin to tilt towards an accommodative stance. Thank you.
Okay. So, I mean, they cut by 50 basis points. In simple terms, that's 0.5%. Now, many people were expecting with the fact that, look, inflation is what's mid-teens. Why was the cut? I mean, obviously, you don't have the minutes of the meeting to close to the next meeting. But some are wondering, even I personally was expecting maybe a 1.5% cut. Why do you think um, why do you think the cut was so small? Why wasn't there a larger cut? And what was your own forecast? Were you expecting a larger cut? Were you expecting a smaller cut? Were you expecting a hold stance? Why do you think the cut was so small?
All right, thank you for that question. 1.5%, that's about 150 basis points. Wow.
Yeah.
So actually, the important question here is that, is inflation dropping? Yes. We've seen inflation drop to about 15%, currently coming from about 30% in 2024. So that is a sharp drop, which even the MPC also acknowledged the fact that inflation has dropped largely to 15%. But the decision at the meeting was somewhat cautious, which is what I likely expect. I earlier said that the committee would either hold rates or actually do a very mild cut, which is what happened. So interestingly, we've seen that even markets were expecting a sharp cut because, inflation is already coming down. But, the CBN has to be cautious because of a number of reasons. Number one is that after the fact that they have acknowledged that inflation is coming down, there are still, they keep their eyes on inflation expectations because the committee don't just look at what inflation is, they look at expectations and risk that are associated with inflation. So all of this influence their decision. They want to be sure that inflation has sustainably dropped. They want to see that what we are seeing is not just a short-term gain. We want to be sure that the inflation numbers has been, firmly anchored before they start to, cut monetary policy rates. Also, you acknowledge the fact that another reason is that we've been seeing that this stance whereby they've been hiking policy rates, especially in 2024 when they increased it by 8.75%. We've been able to attract a lot of inflows from foreign portfolio investments. We've seen a chunk of them coming into the system. The committee wants to ensure that they are not in rush to start cutting rates in order to sustain the gains that they've seen in that aspect as well. And another thing that influenced their decision at the meeting also is the fact that we're in pre-election year. And, historically, we've seen that whenever we're in pre-election year, we see inflows of liquidity in the system, especially from the fiscal side. All of these are, they bring about risk into the system, So when they see that there is enough liquidity, when there are enough liquidity in the system to the extent that they begin to pursue FX, then it sort of bring about renewed pressure on the FX. And you agree with me that last year, we've seen some level of stability in the FX on the back of the previous tightening that they have been doing. So yeah, it's a mild cut. And I expect that personally, although market was expecting a sharp cut on the back of the fact that inflation has begun to drop down. But you will know that it's not about getting it took us 2 painful years to get to where we are. So the CBN will not want to reverse any gains that we've seen. So they want to ensure that inflation is firmly anchored before they start to cut rates, aggressively, which is not what we see in year 10. Even though they will start to cut rate, but they will be more cautious in doing that.
Um, for the everyday person, when you hear, oh, there was a cut in interest rates, some people might argue that Nigeria isn't a very credit heavy economy. So a 0.5% cut, I mean, how relevant is it for the average Nigerian? Um, what impact will that cut have on them? Do you have any impact at all?
All right, thank you for that question. Yes, so for an average man, the effect might, because the cut is not, that big, but the impact will still be there, even though it is going to be indirect, kind of. So the first thing is that for every individual that borrows from the bank, you might now to see that the rate at which bank will charge you on your loans will begin to drop drastically as the MPC continues to drop rates. So that is number one thing. The loans you get from banks will begin to reduce. I mean, the loan rate will begin to reduce. That's the first thing. Another thing is from an individual investor's perspective. If as an individual you have a portfolio where you invest in fixed income, equities, you begin to buy T-bills and the likes. So we see that with the rate coming down now, you would, for investors that have portfolios of investments, you begin to, adjust your portfolio to move away. Maybe you reallocate your portfolio to move towards the equities market. Why did I say this? Is because when monetary policy rate begins to drop, as it is, we'll see that even businessmen can go to the bank and borrow loans, borrow at a cheaper rate. So once you are able to borrow at a cheaper rate, it begins to, you will now begin to, expand your business. You begin to finance all of those your businesses that needs to be financed. You begin to go on expansion financing. And once you begin to do that, the profit margin of those business will begin to increase because their costs, the cost at which they borrow initially or before was a bit high. But with these cuts, you might see them now starting to drop down. And as businesses begin to expand, what is the implication of that? Their profit will go up. They are able to pay dividend to myself and you as an average Nigerians that, have stocks of all of these companies. As the company begins to do well, what happens to their stock price? It begins to go up. And as it's going up, the stock price, take for instance, you bought a stock price at 200 naira per share. So as they begin to, do well as business, profit margin begin to push up, you will see that the stock price of that same business you bought, maybe 200 naira, begin to go up as high as 300, you see improvements in stock price generally. You see a rally in the equities markets. So what does that mean for you and I as an average investor? We begin to see our portfolio doing well. So generally, even from this year, from January to date, we've seen that big rally in the equity space. It has improved by about 20 something percent year to date. So that shows that people are expecting that the CBN will begin to cut rates, and those funds, those corporates or companies will begin to have access to cheaper loans, and as such, we'll see their businesses increasing, their numbers are going up, their cost is coming down, and their profit margin is improving. And as such, the stock price of these companies begins to go up. I mean, the ones that are fundamentally okay. So for you as an individual, you have access to cheaper loan from the bank. Your investment begins to, go up. I mean, for the equities part, people will begin to shift away from the fixed income. We'll see them tilting towards the equities markets. So also generally, as inflation continues to go down, which is our outlook, we'll see that the amount of money, the value of money begins to, increase. Initially, we are coming from a period where we have purchasing power being constrained. But as inflation is coming down, we'll see that you have more, the amount of money to buy certain goods and services would continue to increase because inflation is coming down. You don't have to You don't have to pay high amount of money in order to purchase certain goods and services. So, and as such, when people have more money in their pocket, what happens? Their demand will go up. Their demand will go up. So generally, when rates start to come down, it impacts your borrowing costs, it impacts your investments because it begins to rally and you have more funds, especially in the equity space. And lastly, you have more money, your purchasing power begins to go up as an individual. You can purchase more items generally. There is more expansion of business activities. We see employment start to tick up because, excuse me, as businesses continues to expand, there is more demand for labor, wages begin to go up. Your income, even as an individual, you see companies start to review their wage, their salary, and also their wage, as the case may be, which means that you have more money in your pockets as an individual. So it's a lot of opportunities, but the impact might not be immediate. We'll see them gradually begin to, come in. Thank you.
Okay. So the next MPC meeting, next Monetary Policy Committee meeting is in May. What do you think will happen then? Do you think would there be a further cut? Will it be a bigger cut? Will it be a whole situation? What are your expectations for that meeting?
Well, the next meeting will be in May, which is in 3 months' time. Yeah, so it's in 3 months. So the decision at the next MPC meeting will be contingent on the macroeconomic landscape. What would happen with inflation? What will happen with exchange rates? What will happen with liquidity in the system? A number of all of these indicators would influence the decision. But from our own outlook, I'm seeing that the CBN would want to continue in this easing the cutting of rates. They will start to, continue to cut rate as they've started to actually. So we're expecting at least about 50 to 100 basis points, considering the risk of pre-election year. Historically, when we are in pre-election year like this, we see more money flowing in the system. And if they are not properly managed, it can bring about renewed inflationary pressure. So they won't want that to happen. They will see that they will be cautious in cutting rates. They won't start cutting it by maybe 300, 400, 500 basis points. No, they won't see that because it's pre-election year and a lot of risk are out there. So I'm expecting another 50 to 100 basis points cut. That is 0.5% or 1% decline in monetary policy rates.
Okay. Then I know we are just 2 months into the year, 10 months to go. But where do you think by December 2026, where do you think the interest rates will be at?
Okay, so by the end of the year, we are expecting that the rate would close at about 24 to 25%. On the back of the fact that if all of these factors I had mentioned earlier, if they continue the outlook we have for them, which is a decline, and the exchange rate we expect it to continue to stabilize, if all of these things are kept intact, then we should see in total a 300 basis point decline in that's 3% decline in exchange rate to about 24% minimum, 24% minimum at the end of the year. So the range for us is about 24 to 25% by the end of the year.
Okay. I mean, then do you think, I mean, one of the some people feel that one of the reasons the balancing act that Syria is trying to do is obviously you've had FPI, foreign portfolio investment inflows and all that. Do you think that keeping rates as steady as they are or keeping rates as high as they are, or to put it differently, which do you think the CBN is trying to prioritize? I know you have to juggle all balls and you have impossible trinity in economics and all that. Is it a case of we want to, we still have to keep interest rates this high so that we maintain FPI inflow, which helps with the exchange rate stability? Or is it a case of we we have to keep we have to cut interest rates, but we don't want to cut too hard so that you also don't have you don't have an influx of money into say FX, because one of the worries people always have is if you have low interest rates, you have higher liquidity, then you have higher speculation in the exchange rate or the foreign exchange markets. So which do you think is the biggest challenge for the CBN this year?
Hmm. Okay. So the CBN actually looking at a number of things actually. So the first thing is inflation. Inflation is one of the major reasons why they have been hiking rates. Um, Also, not just inflation, the CBN wants to ensure that they want to, sustain or to keep the interest of the foreign portfolio investments. Last year alone, we had about 19 billion dollars from the FPIs into the Nigerian economy, just because the interest rate is high. Why is it like that? When you compare with the US Treasuries, US Treasury is about it's between 4 to 3 to 4, 5%. I mean the 10-year US Treasury and the 2-year US Treasury. So if as a foreigner you are getting 3%, 4% from your government, and here in Nigeria, the government, I mean the policy monetary policy committee is offering to give you a rate of 27%, 26%. I mean, that is a lot of gap. So the interest rate differentials is what is making these inflows of FS to come in. The foreigners are trying to take advantage of this high interest. So the CBN wants to ensure that this inflow we are seeing coming in, it has a lot of impact. We've seen it helping us to stabilize FX, because once we have more FX dollar coming into the economy, it tends to it tends to help us to stabilize the currency, the naira currency, and we've been seeing the result of that. The naira has been appreciating. Last year, it appreciated by about 7% compared to in 2024, where we have it depreciated by over 40%. So, the CBN is also looking at that. They are not just looking at the fact that, yes, we want to ensure price stability, which is their core mandate. They are trying to achieve that. Also, they also want to ensure stability in FX. And they would need a strong supply of FX into the foreign exchange market in order to achieve that. So that is why they also want to ensure that these inflows of FX we are seeing in the system is being sustained. So they are looking at that as well, which I think is also good for the businesses. I mean, we have a lot of businesses that need FX for their business. They import some of their inputs. So once FX is stabilized, it reduces their operational costs. So CBN is looking at a whole number of things. They're also looking at growth of the real sector, because when rates start to drop down, businesses have access to cheaper loan and they are able to expand their business activities. So all of this it makes it very delicate for the CBN to make decisions. However, the cut we are seeing, we expect it to be sustained, but cautiously, so that other gains that they have achieved, which I've mentioned earlier, would be well sustained. So they are looking at all of other factors, not just inflation. Exchange rate is there, and also they want to support the real sector, but they want to do that cautiously so that we don't reverse the gains that we had seen earlier.
Okay. Okay, so thank you for walking this through, because I think for a lot of people, they just feel, oh, the MPC meeting is just about interest rate, or the CBN is just about supervising banks and interest rate. But a lot of people also don't know that the CBN also has, also has these parameters to consider. So the next meeting will be in May. Hopefully, we'll get you back. Hopefully we'll have a cut. I'm looking for, I mean, I want a cut because I'm the stock market guy. So lower interest rates are positive for the stock market, as you've explained. So that's great for me as well, for my own portfolio and just generally the financial markets, the equity side of things. So thank you for joining us. Hopefully you join us in May, and for everyone who is listening, uh, don't wait till May to follow the podcast. You can find this podcast everywhere else, across all popular podcast platforms. and you can also find this on YouTube as well. So thank you for watching, thank you for listening, and have yourselves a lovely weekend. Thank you, Deborah, as well, for obliging us uh, by walking us through the mechanics of the MPC and all that.
Thank you very much. It's my pleasure.
Thank you for having me. And thank you everyone for joining. In case you're listening to this or when you're listening to this, hopefully, I know today is Friday. Don't forget to like, share, subscribe. You can find this podcast across all platforms as well. It's also going to be up on YouTube. And so I see you in the next episode. Thank you, everyone. Thank you, Itse. Thank you, everyone. Thank you, Deborah. Have yourselves a lovely, lovely, lovely weekend ahead.
You too.